Well, hello and welcome to the weekly game plan. This is a new thing for us, so we're going to try and do this every week. If you like it, if you don't, obviously we'll stop. So let us know what you think about this format, and if you guys like it, we're going to be looking at some stuff today. We've got quite a few charts to get through, so we're not going to waste too much time. As you can see, the charts are all obviously up on the website, on the blog post as per usual. You can leave comments and that kind of stuff. You can subscribe to our newsletter as well. There should be some prompts for that if you want, then you'll get notifications when these go out. In the meantime, we're going to be going through some of these charts, just looking at them using TradingView, which is one of the platforms that we like. And we'll be talking a little bit about them. We're going to try and keep it as brief as possible. There might be some things that we may or may not mention that is either in the blog post or not in the blog post. So yeah, let's get started. S&P 500 using the SPY ETF to track it, obviously. So it broke this downtrend, which was relatively sort of constructive, if you want to say. So it had us looking for new highs. We on the Nasdaq, on the QQQ ETF, said like if it broke this range that it had been trading in, that we would it would probably lead us to closing our short positions on the S&P in particular. I mean, not the S&P, on the Nasdaq in particular, which of course we did. And then it ended the week retesting this level quite a bit. So, well, sort of ending right on that level, right? So this is quite an interesting thing. I think we need to watch to see whether or not we see a reversal of this level for the long sort of case to stay alive. And we also, if we do break below this sort of support level now, we could probably come back to the bottom end of this range. Now, this situation looks very similar on a number of different indices. So if you look at the Dow Jones Industrial Average and the S&P, very, very similar. The Nasdaq probably just pulled up a little higher. But what we're seeing here is these three candles, and this is on the cash market or on the S&P 500 ETF called the SPY, that these candles are not very bullish. These last three in particular are not very bullish. And they look very similar to that on the Dow Jones or on the IYY or the Dow Jones basically ETF as well, right? Very, very similar position. It's kind of like a hanging man and two spinning tops. I don't know if those bodies are too big to be spinning tops, but this candle formation is kind of on all three of the major index ETFs at this stage. So that kind of is representative of the cash market. It's not looking too super bullish, but if you look at all three of these charts, you wouldn't be sort of the only person looking around going, well, wait a minute, is that not an inverse head and shoulders? So we'll see what happens. I think that if we manage to hold this support level on the Nasdaq, which is relatively important, or even if we dip below it for the week or whatever the case is, but if we see this sort of what would be the left shoulder level holding and a push back up towards this towards the upside by the end of the week, then we could have this inverse head and shoulder situation play out, and that's kind of sort of evident in all three of the major index charts or index charts in the US at the moment. So I think that's definitely something to keep an eye on. This is a very negative, very bearish little candle formation. I don't know. Correct me if I'm wrong. If there are technical analysts out there who are who can identify this formation in particular, please let me know. Just to me, gut feel kind of says that doesn't look super bullish. Another one of the things that we look at is SOX, which is the Philadelphia Semiconductor Index. Again, this is an ETF on that, and as you can see, same sort of chart pattern happening here, very similar at least. So maybe a move back down to test this little breakout, perhaps. We'll see. DTX is the Dow Jones Industrial Average Transportation Index. What I've marked out here is maybe a potential head and shoulders. Friday's candle was relatively bullish. This is the actual spot index, or so this is there's no real difference between, it's not an ETF that trades maybe a bit different to the actual market. This is the market. So maybe this is a bit of a head and shoulders here. If we break down below this, we could be testing, scrambling for these levels here. If those fail, maybe even a retest of this 200-day moving average. That's potentially possible. I think that the pricing on the DXY is currently broken, so we use this one. We had the range here using the sort of wick highs and lows to indicate our box or our rectangular formation. I've now moved those to sort of respect more the candle closes or the real body closes rather than the sort of wick extremes, right? But what's interesting here is to see now how we've had this downtrend kind of break. There were a lot of charts doing rounds with this trend line in here. We stuck to the box just because we felt a bit more comfortable with it, and now we've had this bit of 3 days of support on the what was resistance is now support, as well as on the shortest moving average on the bunch here, which is a 20-day moving average, as you can see there, right? So as long as that 20-day moving average holds and this resistance / support level here now holds, we could potentially see a move higher for dollar strength, which obviously will be rand weakness in our market, weakness in commodities, that kind of stuff. If we break back below here, these two levels here are very key. That 20-day moving average and this resistance level are sort of the key. If we break below back into this and we see more dollar weakness, we're going to have strong commodities, strong rand, strong retailers, strong banks, and a lot of the bullish setups that we're seeing on our side will work out. So yeah, it's all about the dollar index. I think that this is maybe one of the major themes that we have to keep reiterating and bringing it home every week. Dollar index really is sort of big daddy indicator in charge at the moment. At least that's our 2 cents, our view, the way that we see things at this stage. VIX not really telling us anything. VIX on the Nasdaq also not really saying anything. Rand dollar exchange rate, we did see this. We had this range marked out. We saw a little fake break. We thought maybe we go to 1550. We reversed very quickly. Then throughout last week, a couple of different things started happening. One, fundamentally, there's all this positive stuff. SAA, independent power producers. Well, okay, I guess SAA is definitely not good news, but there was sort of corruption arrests and all sorts of good things coming out of South Africa. So that could be a little bit of the driving force behind the stronger rand here. But overall, I think it is probably the dollar index that is going to be the driving force here. So let's keep an eye on that to give us an indication of where this is going to go. Although, if you discount this as just a fake breakout, support still at 1632-ish, resistance still at 1780, so not too terribly much has changed. Oil price is interesting. Sorry that I'm moving so fast. We just want to get through tons of things. Oil price is interesting. This is a key sort of DeMark level. So this is a key point of support, and we did actually manage to close below that on Friday. So that, in the context of a downtrend, it came up, tested the 200-day moving average, kind of rejected it. 20-50-day gave a bearish crossover while underneath the 200-day moving average and breaking key support. It's looking pretty bearish to me. There's also that seasonality thing which comes into play. So oil is generally weak. Hello birds. Oil is generally weak this time of year in any case. So local stocks, let's look at some of them. ANH, we were watching on Anheuser-Busch InBev for a potential bull flag formation here. However, Friday's close did actually manage to close below the swing low, so that sort of scraps this idea for us for now, unless we do see a relatively strong bounce here. But, we were interested in how it's going to trade around this 200-day moving average. Potentially breaking it could lead to a bullish trend. It seems to not be able to do that at this stage and has printed a new low. So that, at least on a daily closing base, as well as on like sort of an absolute intraday low level as well. So that kind of takes this setup off the table for us for now. Woolies had a relatively strong day on Friday. We've marked out, that sort of higher DeMark level, which it confirmed a close above on Friday. So that maybe opens it up to this 43.33, 47.30 levels. We basically sort of first triggered it when it broke this level here, just because we felt it was obviously, a number of DeMark levels were touching there as well, and a bit more of a significant resistance level because it's been tested a few more times. And it triggered just the day prior to that. So far so good on this. It's looking pretty good. $42 initial target, 43.33 after that, 47.30 after that. So what's really encouraging is, reaction and break above 200-day moving average is really what we're looking for. Because the mindset at this stage is kind of, is the market doing a medium to longer term bullish reversal, right? We see a lot of things that are very, very, been hit very hard in bear trends, and a lot of them are sort of coming up towards those longer term moving averages. And if they can break up and above those, then maybe we have trend change scenarios, right? Xaro is a bit of a mixed picture. I just want to go back to Woolies, sorry. So there's a couple of things on Woolies as well that we like. It's just sort of started outperforming the top 40 in general. So that might be that might be another thing in its favor. Xaro, we'd marked out this range looking for sort of just a standard range trade, 1 to 2 risk reward kind of situation. It broke below the 200-day moving average, which was quite encouraging. It's come back up, it's tested that, it's made 2 hanging men and what's like a really kind of fat, weird looking kind of doji situation. So technically that looks relatively bearish from a candlestick formation perspective, as well as, it's finding resistance at this significant, it's at the mark level, it's a 200-day moving average, there's a whole bunch of different things. But then if you look at the sort of momentum picture, this hasn't given the buy signal yet, but the MACD might give a buy signal, so that could be a potential sort of thing to have you close a short position if you are short. And we also have, basically higher lows on the stochastic while we have lower lows on price, and we have a number of buy signals sort of firing off here on the stochastic. So it is looking like, momentum wise, there's a bullish case to be made. If we get that buy signal, the MACD is going to be even more bullish. But from the support resistance candle price action kind of situation, is looking like, well, it's kind of bearish. So I don't know. For now, this trade not really one that we're too excited about or willing to just jump into. BHP we looked at in the week. Interesting, just to point out here, this little hammer that it made out there that was encircled was not made on significant volume, so it's not necessarily all that all that significant. Maybe it leads to a bit of a retracement and a retest, but all at this stage, simply because it wasn't on, it's kind of like in the middle of nowhere. Well, it is sort of on a support level, right? That in fact there is at a mark level. This indicator points it out really nicely, but no volume spike, so not it doesn't, it's not perfect, we can put it that way. Sasol is very interesting because this obviously takes its lead from the oil price, and this little thing is kind of weird sometimes. That is supposed to be there. So what's interesting here is that this is kind of a hammer. It's a bit fat, but it is kind of a hammer, and we've got 3 demarc levels here that are sort of very significant support. And we've got this hammer on insignificant support with a volume spike. That's bullish, right? Those are all bullish sort of signals. But then you've got this overruling thing with the Brent crude oil, the chart that we just looked at a little bit later, which kind of looks really bearish, right? So, Sasol isn't necessarily a oil company anymore, but the sentiment in energy prices is probably going to affect Sasol relatively strongly. So it might be... I don't know. Just be careful. I think this is a tricky one because we'll just have to see how much buying action is willing to come in here at Friday's close. Because technically this, and even if you look at the way it traded on Friday, it sort of crashed down to $110, bounced there, buyers stepped up and pushed it all the way back above the VWAP for the day. So there's definitely a lot of buying interest in the stock on Friday. It's interesting you say that it's down 3.5%, but there was definitely people, looking to bargain out, and you can tell that by the amount of volume that pushed it back higher. So let's be really careful of this, but this could be, quite a bit of action in here on Monday, second day play, that kind of thing. So just stay open and flexible, open-minded around which way it's going to go, right? Vodacom, relatively interesting. So we're just watching these consolidations around these 200-day moving averages for the most part, because that's, I think, something that we feel that we need to focus on at this stage. Interesting to see here, we once again have higher sort of bullish divergence, so higher lows, lower lows, and we have what is very, very close to a buy signal on the MACD as well for Vodacom. So maybe a break above this little consolidation could see us going back to the high of this range, 137.50-ish. Who knows how much higher it can go from there. Telkom, stormer of a day on Friday. It's a volatile stock in general, so I guess it's not really the most important thing that Friday was strong. But what we like here is that we have this long 200-day moving average that has now been broken. We did close above it, so if you look, it's pretty close, but that's above. So maybe we see it going up to test some of these resistance levels we have marked out. It's very possible that it could be sort of a longer term trend change scenario here, so this is definitely one to keep an eye on. Tiger Brands we have already looked at, I think, last week. So far so good. I mean, if you can also, some people are also drawing in this this sort of trend line here, and building a case for being long. We just like the fact that it consolidated around the 200-day moving average. There's a lot of mess here, so it's hard to see, but it consolidated around this 200-day moving average for a while, and then bounced off relatively strongly. Also, there was this inverse head and shoulders formation targeting 228. So this is looking good so far. Remgro is also one that we're keeping an eye on. Nothing really too specific here. Well, I suppose let's really get into it. We've got relatively bullish looking stochastic, so that's not so bad. It's only just peeked its head out of relative overperformance, so it could be doing this, right? It could be faking out, but it could, it's worth taking seriously because it does not every time. It's not a fake out every single time, right? And also we have the MACD that's just moved above zero, that is under a buy condition at the moment. So, it's actually not looking all that bad for a potential sort of medium-term reversal here. We could potentially come back up, test the 200-day moving average. That's targeting 130 at this stage, which is a mighty long way up. And so it offers a relatively good risk-reward, and it broke a very key resistance level on Friday. So definitely want to keep an eye on. Redefine, we see this sort of larger channel that it's been trading in. Obviously, it had us bearish earlier. However, at this stage, it is kind of looking like it has broken this very short-term downtrend. Tried to retest it. Maybe we see a move back up to the top of this channel line. Maybe we just sort of test this 4 Rand to 4 Rand 20 zone with the 200-day moving average being the primary target. We have, it's under a buy sort of condition. Nice little MACD signal line crossover. We'd like to see it come above zero. That would be wonderful. And for the most part, stochastic is also looking like, most of the buy triggers have been, or buy signals have been triggered. So it could be an interesting little trade back up to the top of the channel and or 200-day moving average. Nedbank, similar situation. We initially had a flag formation in here, which we have now abandoned. That support level there. It is looking like it's a couple of different things. Some people are going to see this inverse head and shoulders here. Some people are just going to see this sort of channel line that's breaking, but a whole lot of people are going to be seeing this 200-day moving average as a potential target. So we quite like this as well. It's starting to sort of, wanting to outperform the overall market, which is great. It's given sort of buy conditions on the stochastic. It needs to cross above zero. That would be even better. We also have, a full range of sort of buy signals here on the stochastic. So generally the Nedbank is looking good for a long. Then growth point. So how far are we in? 18 minutes. Oh, gotta go. All right, so we have a couple of different things here. One, there's quite a bit of resistance. We marked out a range here some time ago, which we haven't taken away. So maybe I should just delete that now. But what we really want to see here before, getting too excited, I want to take volume off because sometimes this is a bit hard to see. So we'd like to see it break this trend line, really. Break this trend line, maybe get above the 50-day moving average. That would be encouraging for us. We got a buy signal on the MACD, so that's looking okay. We'd like to see that above zero. And then we'd like to see this stochastic kind of continue to push up above the 80 level. Would continue to make us a bit more bullish, but primarily this little break here. Also, just watch out. That's a reversal candle there, right? So let's see. But I mean, the break above this trend line is really the key for us here. First Rand, also interesting one. I mean, most of the banks are kind of looking the same at this stage. There's a key resistance level here that, as you can see, has been tested like 6 times. So if we open above it and trade below it, maybe open high, close low. So basically put in a big red candle with open above the 42 Rand level and a close below it. That could be indicative that the potential for a reversal and a short trade down to the support here is possible. However, a close above 42 would obviously indicate the opposite, which is, once again, dependent on what the dollar index is going to do and what sentiment is going to do towards global and emerging markets. So this is definitely, that 42 Rand level is definitely something to keep an eye on Monday. Looking at Bright, there's long fundamental story here. Obviously, directors have been buying. Everybody's kind of looking for value. There's all sorts of private equity stuff happening. There's Iceland Foods. It's a really long story. From the very technical perspective, we have a fairly significant resistance level here that was broken on Thursday, confirmed, stayed above on Friday. So now we'd like to see it get above this 200-day moving average to see if we can get a longer-term trend reversal situation in. Overall, this is looking fairly good. This is potentially not necessarily a sort of CFD trade, but really a longer term equity trade or even investment, if I can say that. It's relatively starting to outperform on a trending basis. Has been sort of putting that effort in for some time now, which is great. We have a nice sort of all the boxes ticked on the MACD side, and we also have all the boxes ticked on stochastic, so it is looking decent for long position. AVI, what we're really sort of concerned with here is how it's going to trade around this 200-day moving average. Does it consolidate and break below it, as it did here? Does it consolidate and trade higher? So that's definitely something that we'll be keeping an eye on. Most of the things are starting to look slightly more bullish again, which is why it's on our radar in the first place. Aspen, the initial thinking here was that we have this channel that might break, it's going to sort of trade in this channel, that we had a short from this 138-ish area down to about $100. It's quite a big trade. That stop loss is up here, so it's actually, that is looking like it's playing out. It was on one of the weekly game plans some time ago now. Trades take long to work out sometimes. In any case, now we have this little flag formation that could be forming here, so keep an eye on this. This might break, close sort of below this, or at 115, 114 bucks could potentially trigger a move down to $100. I think some of the air is going to be let out of the bag on these vaccine stocks as well. So let's just see how this goes. Just be mindful of that little bear flag formation. It could offer an opportunity or two. And then lastly, we're going to look at ABSA, which is once again looking like most of the banks. Again, watch for key reversal around this 93.33 level. It's not an exact level. If you were to really painstakingly mark all the demark levels here to create the zone, you're probably going to be looking at sort of 96 to 93 or 96 to 92 as your resistance level or zone. So we'd like to see it get above that and get going, but also, from most of the momentum sides, it's starting to look slightly better, and it's also relatively starting to look slightly better. So those are some of the stocks that we're looking at this week. Let us know what you think. Let us know if you like this video, and if you want us to do this like this every week. We're going to try and keep them short. I know this is already 23 minutes, so it's quite long. Not all of them will be this long. Obviously, we're just experimenting, right? Trying to figure out what's going to work best for you guys. So if you liked it, please let us know, and we'd love to hear your feedback. We'd love to have you comment on the posts on the blog. We'd like to hear your comment if you're watching this on YouTube. Leave comments, reach out to us, and let's get the conversation going, and we'll catch you next week.